Welcome, folks. Give a little bit of time for people to join up. It's happening. Yeah, cover for Phase while he's taking care of his personal stuff. Um, I'll probably just do basic Q&A. I mean, I like to just go off the cuff. You know what I mean? Wing it. That's kind of my style. But if anybody's got any particular topics they want me to go over, feel free to speak up. Well, I guess we can get started. Um, Came in here a little late. Had some work to do. I forgot I had some work to do actually for work, so I had to take care of that first. But thanks everybody for joining. Uh, are there any topics anybody wants me to cover? Anything anybody wants me to go into depth on? I mean, I can talk about phases stuff. I can talk about shares stuff. Buying options, whatever you guys want. If there's anybody that has something specific, just let me know. Otherwise, anybody with questions, feel free to start asking. When you say charting setups, you mean well, that's going to really vary and depend on your style of trading. It's something you have to kind of tailor for yourself. I mean, there's stuff that might work for me that may not work for you. Um, I think that's the best thing I can say, really. I mean, it's like I said, every person is different. Every person trades differently. Every person, they have certain skill sets and certain tickers they like, and some people like to buy options, some like to sell, some like to do multi-leg strategies. I mean, there's going to be different ticker or different indicators and all that. I mean, me personally, I don't really use indicators. I mean, I've got some on my chart, but they're kind of like the last few things that I look at when I'm getting into something. I don't really put too much. I don't put too much weight behind indicators. You're welcome. Dawn. Okay. Implied volatility is going to affect it, I mean, pretty wildly. I mean, IV is actually, in my opinion, more susceptible to affecting the price compared to the actual price of the stock, especially when you're buying options. Um, if you're buying low IV contracts and then the IV spikes, even if the stock price stays exactly where it's at, you're going to see a gain on your contract. So IV is very important. When did you buy the contract? So I'm personally, I hate buying short-term options because of the very reason you're describing. It goes sideways, it loses value while it goes sideways. Um, so you said you have 184 contracts? Hmm. So the problem with sounds like you bought far out of the money contracts too. So the issue with that is theta, even though it's only $1 or $2, whatever, I think you said it was $1, compared to the actual price of the contract. So if you divide the theta into the value of the contract, you get a percentage. The percentage is how much it decays every single day, right? So the further out of the money you go, the more percent theta decay you have. Even though the number is smaller, theta decay increases because your contract value decreases. Yes, yeah, that's probably what it sounds like, especially, yeah. Um, eh, you got a little time. I wouldn't say you got a whole lot, maybe a week and a half at best before that really becomes worthless. I mean, you know, you're in the position where, in a week and a half, theta's gonna have decayed so much that your positions are gonna be so hard to even come back to break even. So, if it does any kind of pump whatsoever in the next, this entire week, I would get out. What's your percent loss? What's the strike? $100 strike. Well, there's decent OI there. You got 3,400 contracts. So, I mean, so what broker are you using? Hmm. So that's probably going to be an issue trying to get out of those contracts. I mean, I've been in position that's the main reason why I left Robinhood because I was in contracts that were losing and I couldn't get out of it even though I set the price lower than the bid. So Robinhood's probably going to give you trouble for that unless it starts pumping. So if you see any kind of pump whatsoever, I would probably try to just cut your losses when it does that because then you're going to have liquidity and volatility in it, and there's going to be more buyers to picking up your when you sell, there's going to be more buyers. Yeah, I mean at this point you don't want to really do that. I mean the only thing if you want to continue to throw money at it, I would say roll those contracts 6 months out or something like that. That's going to be expensive though. That's going to be wildly expensive in my opinion. Let me take a look and see how much contracts cost for August. Yeah, that's going to be pricey to roll all of those. Less, even more bad news, right? I mean, yeah, at this point, I would try to shave off as many contracts as you could, especially when it does a pump. I mean, I think that's your best chance to get out of this with something. You're welcome. Bye. Okay, Joey, go for it. Very good. So, in a position where it goes against you, you can't average down. You have to hold. Um, I've been in time. I've been in situations where I'm holding for 3 or 4 months. Um, and you got to give the market time to swing back around. The good news is this current downtrend, I think, is short. It's going to be short. I think we're going to see some strength back in April. Um, so, you should probably see some kind of movement back up. Um, uh, Give me a second, please. Let me finish with Joey's question. Um, so, once you so if you get into a position and it instantly goes in your favor, or it doesn't really go down and just goes up. I mean, I've been in a position where I'm flipping something, you know, 2 days after I got into it, right? So that happens a lot. Um, I think it's important to understand that when you do see profit, you take it, right? Um, hold on, thought I muted everybody. Yeah, so when you do see profit, you should take it, but also you shouldn't get into a position too heavily at first because now you're in that position where you got in too heavy and it went down, you can't average down. That's the purpose of kind of scaling in or laddering your shared positions. uh, when the value of the stock's going downward, coming towards support, you want to kind of go in with like 40% of the total amount that you really want to grab, and then set limit entry orders at other support levels or other, you know, uh, strength levels to have it execute when it drops down, so that your break even kind of follows down um, the price of the stock. All right, so it's going to be impossible to be at the stock price you need or at the current price, but you can try at least follow it downwards so that once it starts moving back up, you'll be in profit sooner. You don't have to hold as long. You can turn around that stuff, and I mean, you could still hold for 2 or 3 months and you'll probably see a lot more returns. But at the same time, you're going to kind of weigh out your options. Say, well, how long, if I have to hold this for 3 months, I'm in a 50 or $100 profit right now. If I hold 3 months, and I only get $400 or $500, is it worth me just getting out with 100 now and getting into something else to try and flip a little bit quicker, right? So, what's your entry level on solo? What's your break even, rather, Joey? Oh, 697. Okay. I mean, it's not terribly bad, Let's see, 697. Um, yeah, that's That's not a bad area to be in. I mean, it shouldn't take you long at all to see uh, returns on that. Because I mean, like you said, we're at almost 5.5. You're only $1 and some change away. When the stock price has been up to $13 before, you got a bunch of resistance points at 734 and up. So definitely should be able to at least hit break even soon. Does that help answer your question? Talking about solo. It wasn't me that gave it to you, but you're welcome. Okay, I think it was iPod that had the next question. iPod Touch. Uh, Probably stop trading if you're losing that kind of money. And if you, I mean, you see you're about to lose your house. I feel like I'm being trolled right now. I mean, y- is your hand up? If your hand's up, you feel free to ask a question. Hmm. Let me find out who that is. It'd be gone. No, it wasn't. No, it was. Yeah, it was Phase. Yeah. Well, I got quite a few hands raised here. I'm not sure what the order was. I'm just going to start from the top. Oliver Cameron Hayes, if you want to. And if you're not talking, please stop unmuting yourself or I will remove you. Okay, Oliver, go for it. Um, determining determining that is, as far as breakout levels and all that. I mean, that's kind of a tough one to do because you, Sean Garcia, I will remove you if you continue to unmute yourself. I'm not sure what's up with that, but you're about to be gone, bruh. Um, Forgot what I was saying. Um, so when you get to determine a breakout is pretty tough. Not gonna lie. Um, Find out. Let me find you in the server, and you're gonna be gone from there too. Both you and I touch. Does anybody know who they are in the server itself? Because I'm gonna put a stop to that. Um, DM me if you know any information on iTouch and that Sean Garcia person. But you want to look at like resistance levels that the stock needs to break through with strength, right? And look at the gap between that resistance and the next resistance point, and that's going to be the I guess the movement of that stock or the range that it can move between those 2 points, right? So, support and resistance very important. When something bounces off support and starts approaching resistance, a breakout is going to be after that resistance. So it breaks through the resistance and then starts moving pretty quickly, right? Breakouts are going to be those quick, fast movers that rip in a day or two and then hit resistance. So, does that help answer your question? No, I mean the person itself, they need to understand where the points are going to be, how much the stock can travel between the point, and pick a point that is a fair profit for them, right? Realistic profit. Um, Now, as far as OTCs, I stay away from stuff like that. It's can be manipulated pretty easily. It's hard to chart things like that because the value is pretty low. Typically, it's going to be a penny stock that's an OTC, uh, and those are just extremely unreliable as far as being able to do technical analysis. So I have to keep muting because I'm not sure who's the one that's making noise. But did you have any more questions, Oliver? Was that okay? Let me go. So I've got looks like 5 people here. You're third. So let me start. When we go with Coach Eddie, Simon, and then you can go, Jerry. All right? Sound good? All right. All right. Go ahead, Coach Eddie. You're up. Sorry. Let me get rid of that person. This is getting out of hand. Okay. Go ahead. Uh, G- uh, did I? What was his name? Coach. Does anybody know? Fuck. You sure? So I got rid of the person. Oops. Hold on. Give me a second. I'm sorry. Give me a second. Why are there two Bellin Picones in here? Let me send out a message on Discord. Coach, what was it? Coach what? Yeah, I see that. Um, yeah, I think that's what's going on here. I need to figure out how to solve this problem because this is going to be an issue for us moving forward. Um, I can. It's not doing it the way I want it to. Though. I don't understand this stupid thing. Like I hit mute all. Actually, never mind. All right. Um, Now I think it works. All right. I'm gonna think, I'm trying to get Coach Eddie back, but we will start with back to Simon. We're gonna go to Simon now. Um, Hey, Simon, go ahead. So scalping, I think mainly it's going to be more for open interest and what you can afford, right? So, that's probably the first thing that I would say. Um, Really, whenever you choose strikes, the most important thing for strikes is going to be the liquidity. And if you don't have the liquidity there, then getting in and or out of the position is just going to be a lot harder, right? So for me, when I look for strikes, that's the most important thing. And then I start looking at the values of the contract and determine whether or not it's the premiums where I need it to be. Does that answer your question? Um, uh, who was it that was talking? Looks like he needs to be Simon. It was Simon. Okay, give me a second. Let me unmute you. Or yeah, a second. Okay, can you talk now, Simon? Okay. Oh, the liquidity. So it just means how many people are interested in that strike. The more people interested, the more liquidity you have. No, no. Liquidity is open interest. The more you have, it just means the more people are in that strike, which means if you're going to buy a position there, it's going to be easier to get. If you're trying to sell that position, it's going to be easier to sell. That's all that means. Okay. You're welcome. Okay, Jerry, you are next. Okay, you should be able to talk now, Jerry. You talk, Jerry? Yep, I can hear you. Well, I'll usually start at a 30 or a 60. 180-day time frame is probably one of my favorites, and 1 year also is my favorite. Um, I generally, so like, I'm gonna share my screen real quick so you can see. I pulled up Can. So for this, I wouldn't even bother looking anywhere further than uh, this time frame right here, which is probably going to be 60 days. Let's go 60, not even. Let's see what 30 looks like. Yeah, 30 is going to be the best one here because I don't need to go any further out. You know why? Because the thing is, the further I go out, it just goes kind of flat and straight, right? So there's no real movement anywhere in here. So you kind of want to go to like the time frame that encompasses most of the or like 99% of all this movement, right? And that's going to be like the 30 right here, I think. Um, and this helps you see support levels. It looks like it's still dropping. I would anticipate it to continue down towards like 1850 or so. Um, yeah, and that's going to be where your strong, well, I don't even know if I'd call it strong support, but I'd say there's pretty good support there. Let me remove this. Yeah, I mean, I'm not sure. I'm trying to find where you would have like where it made sense to buy. I mean, I guess there's some kind of support there. Yeah, I got two support levels and a resistance acting as support. So, I mean, this is looks like you bought about right. You said 26 even, 26. Okay, so roughly there, right? And it broke through that support. You see, and it continued lower. So your next support level is going to be this one here. You got all these points bouncing off this area. So if it does bounce there, I mean, you should still see it come back up because I mean, there's no real resistance points to about $30 or so. Um, well, I mean, I've got 7 or 8 positions, and I have so I sold CSPs. They all went in the money. I'm down on all of them, five, six, seven, $800. It's not a big deal, right? You got to give it time to come back. For me, it's different because I'm going to be selling covered calls on them because mine that was my intention from the get go. However, for you, if you're buying, you just straight up bought shares and you're trying to flip those shares. I would probably average down at that support level of 1850. It comes down if it comes down there. I mean, there's no sense in continuing to wait for it to jump back up. I mean, this is the problem with throwing so much money at something right from the get-go because if it goes against you in like in this scenario, you're down a massive percentage wise, and in order for you to get your break even down as close to the stock price as possible, it's going to require a substantial amount of money because you already put 4,600 bucks in. I would have started at 1,000, and then every time it hits a support level, throw another 1,000 at it or 1,500. You know what I mean? Like something like that. Um, so uh, go on my channel on the Discord. I've got multiple videos that explain support and resistance, and a lot of chart analysis. I think there's very good information there. I think that would help you out a lot it'll help you visualize it and you can continue to rewind it and watch it over and over, until you understand. I think that would be the best way. And then once you watch that and you have, some questions answered and maybe some new questions created, come back to me with new questions. But I think that's a good place for you to start, especially because you're new. It'd probably be best to start there and kind of get a general understanding of the concepts of it. So I've got a playlist on my YouTube channel, and it's just called Stocks. So it's just like a bunch of 5-minute videos, some 15 minutes. There's like a 30-minute video, and it's all just based off of chart and technical analysis and a couple of strategies. Like it teaches you Greeks, trend, 50% retracement and Fibonacci. There's quite a few videos in there I think would really benefit a share trader because this is where I started. I started trading shares, and these techniques that I'm talking about is what made me a successful share trader. No. Yeah, I wouldn't take any losses on anything. I mean, people that know me know that I don't take losses. So it's just you got to have patience. I mean, there's nothing to stop it from where it's at until it hits 1850, right? It could create a new support level that That could happen. But for me to be confident and say that it's going to have some strength, it's going to have to hit 1858 for me to say, okay, now's probably a good time to grab more shares, if that makes sense. Yeah, I mean, when it goes back up, that means that you'll have time, or rather, it'll take less time for uh, you to come back into profit versus if you wait it out and wait for it to go back up to the number you got into, it's going to take a little bit more time, right? So, if you're able to average down, you're able to get out faster and you're able to lower your cost average, if that makes sense. Well, how much is that particular position in relation to your portfolio? Like how much percent of your portfolio is that one position? So you got 4,601 and $492 in another. What is your total portfolio value? So you're basically all in. So that's another issue that I would have is being all in is a bad idea as well. Um, yeah, I mean, granted, you kind of have to with less than 5 grand. But so if I were in your position and I had 4,500 bucks, I would probably do one ticker, and I would only throw $1,000 at it. And like I said, I would do that thing where if it comes down to another support level, you're going to want to average in there, and you want to stick limit entry orders at every support level, and do $1,000 every time. So you get in with 1,000, do a limit entry order at 1,000 for another support level, and if it breaches that support level, find another support level and throw another $1,000 at it. All right, so that's how you average down is you want to follow your break even price needs to follow the stock price downward. It doesn't necessarily have to try to keep up. I mean, if you can keep up, that means you're averaging down in a smart way. But the goal is to average it down and get your break even to follow it downward so that the moment it comes back up, you're going to be in profits a lot sooner. And you got a lot more money in it. So if it ever comes back up to the profit target you were looking for from the get go, it's going to be a lot more value than, say, had you bought everything at one time and it went up. Oh, yeah. Flip stuff quickly. You want to flip stuff and compound your money. The whole idea about this whole stock thing is you flip your stuff so that your money compounds and you get into new stuff with more money. Right? And if you continue to hold a position, then if you hold that position for a month and you're in $500 of profit, it's going to come down. You're going to lose that chance to take that profit. Right? It's not nothing ever goes up and continues up. Right? It just doesn't happen. Yeah, start setting a percentage. Like tell yourself, I'm gonna take profits at 10%. Uh, uh, I'm gonna take profits at 10% no matter what. Now, that's another way to build your wealth quickly because every time I ever got into a share position, when I saw 10 or 15%, it was relatively quick within a few days. A lot of times. I mean, there's times where it didn't happen, of course, but there's times when it did, and then it fell right back down to where I got into it. And it did that three, four, 5 times, and I could have made $80 4 or 5 times. And then the last time I got in, it jumps to 15, 20% in stock value, and then now I'm showing $300 in value. And had I recycled that position 4 or 5 times and I started with, let's say, 500 bucks, now I've got 900 and I'm in the same position at the same price I got into before. And when the stock pumps 15 or 20% this time, now I'm looking at, you know, three, four, $500 in profit, right? So that's what you got to go after. Well, never buy anything at highs. Well, it, you need to make sure you're not buying trash stock either. Right? That's also important. I think you should put a little bit of fundamental analysis into your plays, especially if you're buying shares. Um, it would probably help. I, don't go out there buying random stuff, right? Just understand what you're buying. Make sure the company is a good company, and you can take advantage of the market swings. But if you're getting into something you've never heard of, you don't know what they do, you really don't know anything about them, you're asking to lose money now, right? So the goal is not how much money can you make; it's how much money can you prevent from losing. If you can prevent zero losses, or if you can prevent yourself from losing anything at all, you're gonna make money, right? That's it. That's all you need to worry about is as long as I don't lose money, I'm making money. All right. You're welcome. No problem. Okay. Give me one sec. I gotta stop sharing so I can look at this. Hmm. Lots of people. I have no idea who raised their hands and in what order. I apologize. Um, so I know Danny, I know Belen, I know Giovanni. I think all had their hands raised prior to everybody else. So let's go with um, let's go with Danny first. Uh, Go ahead, Danny. What do you mean? Do I care if they're in control? Well, yeah, it's definitely important to know because that's going to basically determine the the depth at which the stock may or may not fall or may not rise, right? I mean, if you're coming up to support and the sellers grow in control, then there's probably a chance that it's going to break through support. And same thing with resistance. If buyers are in control and it grows in strength, it's probably going to break through that resistance. And vice versa, if you're coming up to support and the sellers are starting to fade off and the volume is going away and you start seeing more buyers, then there's probably a good chance that, or that's probably a good indicator that it's going to reverse. So it's not a silver bullet, but it'll help you determine whether or not you should or shouldn't get into something. Um, it can help. I'm not saying it's going to be the thing, but it can help. Does that help answer your question? Did it mute you, Danny? Let me try to unmute you. See where you go. There. Can you talk, Danny? Well, hopefully that answers his question. Oh, okay. Um, Let me see if I can find a ticker with an example. Well, that's weird. I don't use a script, and mine does that. Um, okay. So, unless I have a ticker to really explain it and show, it's going to be hard to, for me to explain. I gotta see if I can find something. Right now, the market's kind of it's a pain in the ass to try and show something like that because there's no, yeah, yeah, everything's kind of back and forth. Um, but basically, what you're going to see is the volume bars. They're going to, yeah, I mean, here, I'll show you. I think this is probably a good example. Okay, can you? Okay, so we're going to look at, let's say, I'm going to highlight section here, right here. All right, you can see the buyers are in control. The green starts, there's more green. So initially, prior to that, you got a lot of red, right? You got some green spikes, but there's still a lot of red mixture. And then all of a sudden, you've got all this green, right? And then it comes here, and you got some green shrinkage. There's some resistance as far as sellers go, but it's not enough. There's less sellers than buyers, and same thing on this day. And then boom, you've got an instant growth of green here, all green, and then a little bit of sellers, and then back to green again. Boom, 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 boom. Right, and same thing here, a bunch of green. Right, and again more green. But once we hit this point, now you see the trend has changed. Right, you got red here, so there's resistance. So you can say this is a good resistance point. This is a valid resistance point because let me just draw this because the volume rapidly changed, right? And it bounced off of that, right? And now you've got a situation where the next time it pumps through, it jumped up, but it didn't hold. It came back through downward, right? So that right there is a solid resistance point for this, for like Las Vegas Sands, right? And um, same thing over here. It did it again, right? It tried to get through that resistance point, got pushed back. Tried again, got pushed back. Right. So and I got all of that information based off of just this volume right here, right? So I look at this volume and now I see, okay, there's a resistance point. And then I start looking at everything else after. I'm like, oh, there, it makes it valid here, makes it valid here, makes it valid here and here, right? Cool. You're welcome. Okay, Giovanni, you're up. And let me just unmute you. Where's the damn? Hold on a second. Damn it. I hate how I have to unshare this to really look at the thing properly. Where did it get? Did he leave? Giovanni? Did you not have a question, Giovanni? Did you want to? Saw your hand up. Did you? You can talk. Yes. Well, I just went over it right here on Las Vegas Sands about resistance. All right. I don't use candles. They're great to use if you know how to use them. If you've studied them and you can look at it and tell what kind of candle it is, yeah, they're great. I think candles are a solid way to analyze something. Just like chart patterns are really good. Trend direction is really good. Support resistance is really good. Those are all charting um, technical analysis. So if you do know how to use it, it's great. But I think candles are going to be a little bit tougher to do than your typical technical analysis because those are more they're just really hard to spot. Something might be one thing, you might see one thing, but it might be something else. So that might be an issue as far as that goes. Um, Well, support and resistance is well enough. You don't need to know candles. If you know them, it's great. But if you don't, it's not. It's you can still make money without it. Um, so I mean, I think that's important to know, right? So candles to me is more advanced. I think you got to learn the other stuff first. You're welcome. Oh, no worries. No worries. Um, okay, give me one sec, guys. I gotta redo something on my YouTube stream here. I'm gonna restart my YouTube stream for those of you that are listening. I figured out why sound's not coming through to you guys. So give me one second.